Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys, and it's that time of the week where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, every single one of these options plays is going to be for selling puts as part of the larger wheel strategy that we run most frequently on the channel in my own trading account. Now, keep in mind, guys, selling puts is an extremely easy strategy, whether you're beginner, intermediate, or even advanced investors. Just think of selling puts as a buy limit order that pays you. I'll give an example. So let's say we want to make a trade on Amazon. Let's say we want to buy some shares of Amazon at $190. Well, usually if you want to buy 100 shares, you would just maybe put a buy limit order down here, and it just kind of sits there until either it gets hit or not. Now, selling puts is the exact same thing. However, we get some premium if ever the order is not filled. Let me explain. So if we want to take 100 shares of Amazon at 190, we can go write a short put, or rather write a put here for the $190 strike. You will see that the market is currently paying us $119 to set that limit order in place. Very, very simple, guys. If Amazon closes below, in terms of this week's Friday's expiration, if they close below 190, we will have to buy 100 shares of Amazon as was planned for a traditional buy limit order. However, if it does not go below 190 in that given week, we just simply keep all of the $120. Very, very easy strategy to run. Now, what we're going to do in today's video, guys, is we're going to go over a few of the strategy rules, and then we're going to take a look at the top 5 options plays. So without further ado, let's get right into today's video. So let me give us some context as to what is potentially the expectation for the market in the given week. Well, as we can see on the SPY, guys, SPY is currently in a battle right now. We're looking to continue the daily uptrend. However, our daily higher low is very, very close at 542.37. If we lose this, a daily downtrend is underway, and then we look to the weekly chart for maybe a little bit of weekly consolidation to start off the month of July. So all in all, guys, we may be looking for a little bit of a pullback, but just rest assured, tons of support below us on the markets. And our most recent weekly higher low is all the way down here, 519.27, just looking for a higher low to potentially continue the rally at the midpoint in July. Now, keep in mind, guys, the month of July, seasonally speaking, especially in an election year, is quite a good month. As you can see, starts off relatively flat, may have a dip into the end of the month, and then the end of July and early August tends to be a very bullish period for the markets. So that being considered as well, let's take a look at some of the news catalysts that may affect some of our trading this week. And you will see, guys, there's really not that many. Monday, we have ISM manufacturing PMI. Tuesday, we have a speech from Jerome Powell. Shouldn't really change much because we know exactly what he's going to say, guys. He's going to say data dependent, higher rates for longer, and still no designated time for that first rate cut, even though the market does expect it's going to be somewhere between September and November. So there should really be no change in Powell's speech on Tuesday. On Wednesday, guys, we have some ISM services coming in. FOMC minutes. I mean, we already have the FOMC results from a couple weeks ago. Should be no major changes there as well. The big one is going to be on Friday when we get the non-farm payrolls, arguably your largest jobs report of any single given month. So until now, from now until Friday, not that much in terms of very large market moving events. Keep in mind also, Thursday is a holiday, of course. It is the 4th of July, so a little bit of a shortened trading week this week, only 4 days that we can trade with, but that is perfect for writing options because we get time decay for all 5 days, even if Thursday's market is closed. So all that out of the way, guys, let's take a look at some of the strategy rules that we're going to be looking at to run the put wheel strategy more specifically, right? So let's take a look at some of them. Now, number one, very, very important, guys, we only ever want to be writing puts on a very solid company. It's rule number one for a reason. If ever you write puts on a stock you don't want to own and then end up being assigned that stock, managing the position could be a little bit emotionally cumbersome as you don't have high conviction in what you just bought. So please keep it to only the most solid companies in your favor. That obviously depends, or it differs rather from person to person. Only high quality companies should be on your watch list for this strategy. Number two, we're going to be targeting stocks that are in a monthly uptrend or a long-term range. This just once again betters our odds of not being assigned. If we're always writing puts around a very large support area, usually we tend to get a little bit of a bounce off of that area. So all or most of these rules are going to be to try and add more probabilities to our side of not being assigned. Being assigned is not a bad thing, guys. It's just we want to avoid it as much as possible to just continuously generate premium upon upon premium, right? Now, number three rather, the stock needs to have no earnings this week. You guys obviously saw what happened with Nike last week, right? So earnings can be a heck of a surprise for any given company. This is now the second company that's had its worst day of trading in 25 plus years. The first one was Salesforce CRM a couple weeks ago, and now we have Nike. So it's very, very difficult to predict the size of these earnings moves before they happen, right? So that's why, as a general rule, if you want to be the most safe possible, just please don't write any stocks that have earnings this week. It can just end up in a potential little bit of a disaster, right? So number 4, what we want to do is to be writing stocks at a support area or an area of breakout retest. I always pull up this same example every single week looking at Autodesk, right? So a big support area could be right down here around the 200 to around 195. Huge level of support, very, very juicy area to be writing short puts at in this area of support. The breakout retest trade, guys, is simply when any given stock breaks a large range of trading to the upside. Usually they break above this area of resistance and then back test it. That's what we call the retest area, usually a high probability trade for at least some continuation. So all the plays that I show on the channel will be either one of those two things, either at a large support area or an area of a breakout retest. Now, number 5 and 6, guys, these two go hand in hand. We want to be writing stocks that are on a red or flat day. This ties into our next one, being able to write stocks at or lower than the expected move. Let me explain all of this at the same time. So in any given week, a stock has an expected move that is derived by Wall Street. So that is just saying how much to the upside and how much to the downside can a stock go in a given week, depending on the Friday close. I have Amazon pulled up right here, and you can see to the downside, we're expecting 188.30 at the lowest. So what we want to try to do, guys, is couple these 2 points together, right? If on Monday, Amazon has a red day and gets close to our expected move of 188.30, we want to be writing there at it or even lower than it. It just adds to our probabilities of the premium being collected in our pockets by the weekend, right? So very, very easy. And usually I never chase the market to the upside, guys. Every single short put trade that I put on will always usually be on a red day for the stock because it just brings us down into the expected move. And then we can write even further and further and further below that, guys. It just increases our odds of not being assigned. Now, before last, guys, we want to be writing between 0.5% and 1% in weekly premium. This is somewhat of the art form in options that I've derived over the last 5-6 years of trading this strategy. So it provides the very perfect location between the trade-off between your ROI that you can get on a weekly basis and annualized basis as well, and the assignment risk as well, right? So take a look at the options chain for Amazon right here. If you want to look at about 0.5%, right? Very, very easy. If we're looking for premium in the 0.5% range, just divide the strike by 2. And that should be your cent increments for 0.5%. So let me explain. If we're looking for the 190 strike, you would need to see at least half of this on the bid. So 190 divided by 2 is about 95. So we would need to see about 95 cents on this bid for it to be worth this for us to take that trade. That is the 0.5% rule. Don't get too greedy, however, guys. The reason I say maximum up to 1% is if we go over 1%, you can see here the 192.50s are paying $2.10. You may think, well, that may be quite juicy, right? A lot of premium there. Well, just be careful because 192.50 is extremely close to the current stock price. It is only 0.4% away. So your capacity of being assigned gets even larger as you get closer to the market, right? So that is what we want to avoid. We want to get that perfect middle ground between getting good ROI and not having a large risk of being assigned. And usually that is roughly around the 0.5% rule for any given week on any given strike. It's a rule that you can apply for any given stock whatsoever. Hopefully that makes sense. Now, last, as a matter of fact, let me jump back into my rules right here if I can find them. So we want to set a take profit, guys, at 90% of the contract value. The beautiful thing about this strategy is we basically just set our trades in motion on a Monday or Tuesday morning, and then the rest of the week, we just let the time decay do the rest. Just let the premium come out of the option and into our pockets. So that's why we set a take profit at 90% of the contract value. If ever you're not at your computer, maybe by Tuesday afternoon or Wednesday, your contract will will be 90% profitable. At that point, there's no reason to hold it until Friday. You may as well just take your gains and maybe just find another play. So very, very easy way to make sure that we're really taking our gains once they do happen. Now, if for ever which reason we get a sign, so if ever the stock ends under our strike price and we have to buy the shares, what do we then do? Well, this is part 2 of the wheel strategy. We will then write covered calls against the position, right? So once again, let's say we get assigned Amazon at about the $190 mark, or let's say $192.50 even over the next week. The only thing that we do thereafter, guys, the following week, we are going to write covered calls at our strike price, pretty much at the $192.50 mark, and collect even more premium from the covered calls. So getting into the trade, we'll collect premium on the put side, which lowers our average cost, right? If we write this and get assigned at 190 minus 120 is about, 188.50, let's call it, or 188.80, sorry. And then if we were to write covered calls, it gives us even more premium and even reduces our average cost. And then eventually when the stock pops back up above our strike price, we get to collect all of that juicy profit at one single time. So covered call rules, very, very simple. Same thing as the puts. Covered calls are good enough if we can get 0.5% to 1% in weekly premium for them. And then second, we want to be writing at the assigned strike price or one strike higher. So usually I'm always writing, guys, at my assigned strike price. However, the only exception is, let's say on a Monday morning, let's say we get assigned this next coming Friday. On the Monday morning after, let's say for whatever which reason, Amazon has a little bit of a gap up coming into Monday and opens a lot higher, right? Well, then obviously it's going to be above our assignment price. Then maybe we can write one strike price higher and lock in even more premium, even more gains, right? That's the only time that I'm going to be choosing to write covered calls one strike above my entry level. So hopefully that was clear, guys. That's pretty much all the rules that I wanted to cover today. Now let's get into the meat of the video right now, which is going to be the top 5 options plays for the upcoming week. So number 1 is going to be a series of semiconductor plays, and we're going to start it off with AMD. I actually have 3 of them. So the way this is going to work, guys, is I'm going to be monitoring all 3, and whichever ones provide me the best entries, those are going to be the ones that I'm going to be going for, right? So we don't want to chase. These 3 stocks that I'm going to list for you are currently in dip buying opportunity zones, and we're going to be going for the best one that we can possibly find this week. So starting it off, number 1 is going to be AMD. Excuse me. So AMD is in a very, very nice area of congestion right now, and arguably the lower end of support down here is about 150, where you have this 200-day moving average lines up with a nice area of consolidation as well. So if ever we start breaking down on the Monday morning session, I'll definitely be looking to shop for AMD in the mid 150 range. Now keep in mind, guys, the expected move for the week is this red line right here, 156.62. So if ever on Monday morning AMD starts dropping a little bit into our expected move, think 159, 158, we may be able to find some short puts, think 155, 152.50. We want to be getting as close as possible to this location right here. So let's go have a look together, guys, if we can find some premium down there in those lower levels around the 155 mark. So let's pull up the options chain real quick. And you can see here, guys, 155 strike currently not offering enough premium. Half of 155 is about 77 cents, 78 cents, let's call it. And the premium is just not there. So really what we need to see on AMD for this trade to become live, a live opportunity, we really need to see that drop, right? Come down into the 160, 159, 158. Maybe that'll free up the 155s, and it may even free up the 152.50s. We want to be going as low as possible in this options chain while still getting our 0.5% rule on that premium. So that is going to be my trade location for AMD this week. 155 and 152.50. This little pocket right here is one we'll be looking out for. But as I said, we need AMD to drop to open up those strikes, because as of now, there's just not enough premium. There is enough premium at the 157.50s, but it's a little bit close, guys. It's a little bit close, and it is above our expected move, and we want to be going below the expected move, right? So that is semiconductor play number 1. Semiconductor number 2. So this is all in the first play, guys. It's just a semiconductor trade as a whole, right? Second name in semiconductors is going to be ON Semiconductor. I really like this name, guys. It's coming down into our very juicy area of support right now and really doing a good job of holding up despite our most recent semiconductor weakness. So I love playing this stock. I love it. 65 all the way down to roughly $60 is the area that I want to be targeting. The expected move for today, guys, or for this week rather, is going to be 66.09. So we want to be finding premium below 66.09. Think 65, 64, 63, as low as we can get. Now, let's take a look on ON Semiconductor and see, is there any premium available at those strikes right away? Or maybe do we need to wait for a little bit of a dip? So as you can see here right now, guys, on the 65 strike, not enough premium, only on the 66, right? So 66 is paying about 39 cents, 65 only 23. 0.5% would be about 32 cents. And I'll remind you how I'm doing that in my head, guys. Very, very easy. Just look for half of the strike price in cent increments. So if we're looking for 65, very, very simple, 65 divided by 2, 32.5. We need to see at least 32 cents on this bid right here for the trade to make sense. So goes without saying, guys, that we will need ON to come down ever so slightly to open up the 65 and even $64 strike. So if ever on Monday or Tuesday morning we have a dip down here, maybe into the low 67s, even high 66 range, closer as possible to our expected move, that may definitely open up the 65, even maybe the 64 contract. Now, quick little tidbit, guys. If on Monday morning ON Semiconductor opens up minus 4% and blasts through the expected move, let's say we open up at 65, right? Are we going to be riding the 65s? No, we have to go even lower. The art of this strategy, guys, is being able to go as low as possible on the options chain while still getting our 0.5% rule. So hopefully that makes sense. That's what I'll be looking out for on ON Semiconductor. Tentatively $65, $64. But if we just blast through, guys, then obviously we have to look lower, 63, 62, 61. All depending on the premium available to us, right? This whole range, 65 to 60, is the one I'm going to be looking out for. Now, the third one is going to be NVIDIA. And you guys know after the stock split, we have to be playing a little bit more NVIDIA now, right? So NVIDIA, same thing, right? NVIDIA is potentially setting up maybe for a little bit of a daily downtrend, trying to revisit the lower 117 level, daily downtrend, maybe into a little bit further. Healthy weekly consolidation. Keyword is healthy, guys. The bulls are in full control, just looking for a bit of a weekly higher low and then resumption of the trend. So all throughout this consolidation, I will be looking to play NVIDIA right here. So the expected move for the week is 118.31. Now, because it's NVIDIA, guys, you guys know this one can move, right? Keep an eye. Last Monday, we had a 6% move to the downside. So let's say tomorrow morning, we also end up 3-4% to the downside, bringing us down into our expected move of 118.43. Are we going to be riding 117, 116? No, it's too close. At that point, we have to go maybe for the 110, 111s. So let's take a look, guys. As of now, tentatively, can we find anything below 118 in terms of premium available? Let's take a look for NVIDIA right now. So you will see on NVIDIA, you can see right now, guys, that for the Friday expiration, unfortunately, the 0.5% rule really only starts around, let's just call it for all intents and purposes, 116.50, right? So this is right where your 0.5% rule is. That is below the expected move, but still a little bit too high. 116.50 would be right around here for NVIDIA. What I really want to see is I want to see a bright red Monday or Tuesday session bringing us down into 119, 118, 117. If we can get down there, then definitely, guys, the premium will be freed up, maybe the 111, 112, even 110 strikes. So tentatively, I really want to play NVIDIA, guys. 112 to 110 as close as possible to this 50-day moving average right here. And you can see NVIDIA really hasn't lost the 50-day much in its most recent price action history since November of last year. So that's why I really want to be playing this area right here. That's exactly what I did last Monday when we had this big red day. I played the 110 puts, and you guys know NVIDIA usually has very significant bounces. I was able to close that trade the very next day for 95% profit. So I'm going to be looking to do the same if we pull down in this area, looking maybe for the 110, 112. So that's going to be the trade that I'm looking for on NVIDIA specifically. And that pretty much wraps up our semiconductors. Now, the second play that I want to show you guys is Visa. This company needs no introduction. Such a solid company, guys. One of the most solid companies in the entire market, arguably. Now, Visa has been trending down for a while, right? So weekly downtrend is currently in motion, and we are approaching, not there yet, but approaching daily oversold conditions. Usually in the past couple of months, when we hit these levels, the stock tends to have a little bit of a bounce. Couple that with the fact that on the 4-hour, we are 4-hour oversold, and even on the 1-hour, 1-hour oversold. This is not a tech stock, guys. Usually when Visa gets oversold on the lower time frames, it could be a very juicy dip buying opportunity, and I'm going to be looking to play it on the short put side. So the expected move for the week on Visa, keep in mind, this is my glorious support level, prior all-time highs, prior 52-week highs should be coming into this level. 50 weekly moving averages there as well. You can see how well Visa respects this 50 when it's in a very nice uptrend, right? Monthly, just healthy monthly consolidation down into the monthly 12 EMA2. So tons of large moving average support, guys, around the $260 mark, right where the stock is now. The expected move is 257.41 to the downside. So let's take a look. What can we find around 257 for Visa? So let's pull it up. So in terms of Visa right now, we could take a look and you'll see that at 257.50, we are just a little bit short of our required premium, right? I can tell you guys right now that the required premium is about $1.25. If I can see about $1.25, $1.30 on the 257.50s, I will probably be going for them, but that would require Visa to have a little bit of a dip on continuation on the Monday morning session. If we dip down maybe 261, 260, that could be a great opportunity to open up the 257.5s. If for whatever reason Visa has a 2% negative day on Monday and blasts all the way to our expected move in one single day, then obviously, guys, we want to be looking for the 255s, right? So between the 255s and the 257.50s are going to be the ones that I'm looking for on Visa. Just looking for Visa to give us a nice little bounce here, get some premium in our pocket. And if ever we get a sign, guys, we know that is a top 10 quality company in the market, so nobody should be nervous being assigned Visa, especially after some beautiful 3 months of consolidation. It is pretty much them and MasterCard pretty much have the exact same chart setup. They ran very hard, very healthy consolidation right now, looking for that next leg throughout the year. So looking very solid on Visa. I'm looking forward to potentially having that play. Now, play number 3 is going to be Pepsi. So Pepsi has been one that I played on the channel a bunch of times. Every time it comes down 165, 162, such a juicy trade here, guys, right? Huge support all the way since last October. Looking very good. And where are we bouncing from? Directly bouncing from the 200 weekly moving average. Pepsi does not really lose this 200 weekly moving average. You can see how often they lost it in the past 13 years of trading, only in really huge market events, right? Interest rate turmoil in 2018, COVID, and then once very briefly last October when the entire market was selling off. Now we're kind of just sitting on this level right here. So still representing a juicy trade opportunity around the 165, 162.50 mark. And as a matter of fact, the expected move for the week is 162.76. So let's see if we can find maybe some premium on the 162.50s on Pepsi for the week. Very strong company. Now, moving into Pepsi's options chain, you can see that the 162.50s, unfortunately, are not giving much premium at all, right? That is very normal, guys. Pepsi is not a very volatile stock. You really need the stock price to come down almost right into our expected move to really free up that premium. So what I might be looking for on Pepsi to start off the week, if we get a red day of continuation here, Monday or even Tuesday, bringing us down maybe into the low 163s, maybe mid 163s, that should free up enough premium on the 162.50s. Quick reminder, we will be looking for about 82 cents on the bid. Even if we're slightly under that, guys, 75 cents, I would not be opposed to playing Pepsi, guys, just because it's such a solid company. So that's the trade setup that I'm going to be looking for on Pepsi, 162.5 strike. And obviously, guys, if for some reason the markets completely die tomorrow morning and we really plunge on Pepsi, let's say we plunge below our expected move in one single day, you know, it can do it, right? Pepsi can have some big days down. Let's say we come below our expected move, 162, low 162s, high 161s, Monday or Tuesday, then obviously, guys, we're going to be going for the 160s, right? The art of this is to adjust depending on how strong the market dips on the Monday or Tuesday session. Hopefully that makes sense. Now, the fourth company we're going to be looking at, guys, is going to be Fortinet. So this is a cybersecurity play, guys, and you guys have seen what's been happening with cybersecurity in the last 2 weeks. Zscaler putting on a little bit of a rally. Datadog putting on a nice little bit of a rally as well. CrowdStrike continuously pushing, holding the all-time highs, right? Another one, Palo Alto Networks, pushing up, beautiful daily and weekly uptrend underway right now. So Fortinet has been one that's been left a tiny little bit behind, but this company has beautiful fundamentals, gorgeous revenue expansion, gorgeous profitability as well. No secret there. So Fortinet, I've been playing this one a bunch of times on the channel, guys. in the lower $58 range. I love this, guys. And even if we come lower, guys, you can see how big of a support range we have down here. So even getting assigned, let's say we get assigned at 57, 56, no problem at all, guys. So much support in the lower $50 range for us. That being said, for this week specifically, the expected move is about 58.85. I want to be getting as close as possible to $57 strikes all the way down here, right? So 58.85 is the expected move to the downside. Let's go shopping for some Fortinet premium, shall we? So pulling up the options chain for Fortinet, you can see right here, is there anything available below the expected move of 58.85? Well, let's take a look, guys. The 58s, unfortunately, 57s, same thing as Pepsi. Because Fortinet has not been too volatile in the most recent weeks of trading, you really aren't getting much premium, even though that's only a couple percentage points below the stock right now. So what we need to see on Fortinet to really free up some of this premium at $58, $57 is we need to see a little bit of a drop on the Monday morning session. If we can drop down below, maybe into the low 59s, high 58s around our expected move, that will probably free up the $58 strike or the $57 strike. Keep in mind, for these chains to make sense, we need to see at least 27, 28 cents on the bid for these for us to take the trade. So that's what I'm gonna be looking out for on Fortinet. A little bit of a dip Monday or Tuesday morning, and then we write puts in this little area right here, looking like a very juicy trade. So hopefully the market does come to us so we can continue writing those puts. I've been doing very, very well with them over the past couple of weeks every time we dip down into that location. Now, stock number 5 and the final one, guys, is going to be Square. So Square, very, very nice company, guys. They've been changing, they've been really restructuring their business a ton, right? The company is finally net profit margin profitable, so looking very, very good here. And the company's growth prospects are looking very good as well. Beautiful EPS expansion, beautiful revenue expansion. They've definitely done a great job of turning around the company in the past couple of years during which they were struggling, right? That being said, the stock price hasn't really rallied that much. We're still coming down into this huge area of support that dates back all the way to June of 2022. So it's the exact same level. And here we find ourselves again in the lower $60 range, looking like a juicy swing trade opportunity. So for the expected move for Square, I apologize, I did not put it on the chart. Let's do it together, guys. If ever you don't know the expected move of a stock, by the way, you can always head to this website right here, optionsai.com. They have a free expected move calculator for you. So that being said, the expected move on Square is 62.30 to the downside. So let's put a little bit of a line right about there. So that's going to be our expected move, 62.30, right in line with the lower end of where we got just a few weeks back and the lower end of where we were in January, looking like a very decent trade location for this stock. And the valuation down here, guys, really isn't that bad. We did the valuation after their earnings at 75. Their PEG ratio was only a 0.55. It's even cheaper now. So looking extremely attractive is Square right now. So that being said, can we find some premium below the expected move of 62.31? They're trying to get the daily uptrend going, and they're really trying to finally start reversing this weekly uptrend, right? It's going to take some time, but that is the bounce setup that we're looking for. Now, keep in mind, let's go have a look at Square. So let's take a look at the Square options premium, see if we can find anything juicy around that level. So as you can see, guys, the expected move 62.31. At the 62s, there is currently 33 cents on the bid right there. So this could be a trade opportunity as soon as Monday morning. However, if Square dips just a little bit, guys, if it gives us an entry, let's say we come down into the 63s Monday morning, or even low 63s, right? That will definitely free up even lower strikes, maybe even the 61s, maybe even the 60s, depending on the size of the move if we get a drop on Monday or Tuesday. So these three strikes are going to be the ones I'm going to be playing on Square, most likely 62 down to about $60, depending on the size of the move to the downside. I would be very interested in taking either one of these three strikes. I think it's a tremendous opportunity for the company and would not mind being assigned, because if we get a sign down here, guys, and then the stock starts rallying, we are going to make a ton of profit. So looking very good on Square. Those are pretty much the 5 options trades that I had for you guys today. Those were the safest ones that also give the most amount of premium, but I am going to be looking for some that are a tad more risky, right? The first one is going to be Enphase. Enphase probably needs no introduction, right? They are the market leader in solar inverter technology, and their PEG ratio at 99 is only a 1.61. The company's gotten destroyed just because of the high interest rate environment and reduction of their demand. That being said, guys, the stock is down a tremendous amount over the past week and a half of trading. And what I'm going to be looking for on Enphase, guys, I need to see a disaster day, right? I need to see another one of these 4 or 5% to the downside, and that's going to open up a ton of premium. If I can find some short puts on end phase, maybe the high 80s over the course of this week, high to mid 80s. If we get a heck of a drop on Monday or Tuesday, most likely that'll open up the mid 80s, which I really do think, guys, starts to be a little bit of a deep value situation for end phase. But keep in mind, the sector is out of favor. Any moves in interest rates to the upside will hurt this stock, and it is a very risky endeavor, right? I did play this one last week for the first time in a very long time. And as I said, well, obviously none of this is recommendations, but I don't recommend this. This is if you're really at your charts, and you catch a very, very big move down, let's say, and we start getting some deep 1 hour or even 4 hour oversold conditions, like was the case over here, then we can be riding even lower and lower, right? So it's going to be a trade if you're at your computer and you want to make a little swing trade at it. Usually when we have a big dip and a next day recovery, you can be in and out of this trade in pretty much 24 hours. That's trade number one. A second trade that's a bit more risky, guys, is going to be Nike. Nike obviously got absolutely destroyed last week, right? And the thing about Nike is that I do want to be playing short puts, but the problem is it dropped so much that the options chain has not even caught up with the amount of the drop. Take a look here, right? You had $1 increments, and now the best we can get under 75, which is for all intents and purposes, the price of the stock right now, it's at 75, right? The best we can get is $70. So the only trade that I'm going to be looking to make on Nike is if we get some continuation, right? 3-day rule after earnings. Usually you wait 3 days and let the stock work itself out. Take a look at what Starbucks did. Same thing. Massive drop. 3 more days of sideways, 4 more days of sideways, and then they mounted a little bit of a rally, right? So what I'm looking for on Nike is if we continue this decline into the lower $70 mark, the expected move is 70 to 71. So let's say Monday, Tuesday open up, we start trending towards 70. I'll be looking at this $70 strike, trying to find as close as possible to 30, 35 cents as I can. Going to be looking to play Nike there because $70, guys, especially coming into daily oversold conditions, the RSI on the daily is 18. That is one of Nike's lowest RSIs that I've seen in recent history, right? So it is very, very oversold and it won't last forever. Eventually, we will get a bounce, even if the result of the bounce could be more downside. All we're looking to do is pick the bottom of this initial move, get a little bit of a bounce, get out of the trade, and then it can pretty much do whatever it wants. So that could be a decent one for this week, but obviously very, very risky, right? Another one that's kind of on the risky list is going to be Alibaba. So Alibaba retesting this lower range right here, $71, $70, this whole location down here. I still do believe the stock has incredible fundamentals, just being underappreciated by the market right now. It's had a bit of negative news as of recently, but nothing truly fundamentally changing for the company. That being said, if we do have a minus 3-4% day on Alibaba, Monday or Tuesday, it may free up some $69, $68 puts and high 60s for Alibaba, guys. In my opinion, is a very, very attractive share price for the company, and I will be looking to bid it down there. So that's just the trade I'm looking to make on Alibaba. Pretty much, at this point, guys, 6-7 months worth of support in this lower location right here. And the last one, which is a little bit risky, I was going to put it on the top 5, but this one, guys, is just a bit risky. Not that the business is risky, but the stock is extremely volatile with all the news of consumer discretionary spending being down, Nike getting crushed, Starbucks getting crushed, a lot of other companies not faring too well. I don't want to really publicly put this out there here, guys, just in case people get trapped and they don't have high conviction in the company, right? I personally like the company, but somebody who doesn't know too much about the company, they just may not be able to handle the volatility like this, right? That being said, CLH coming down into the $48 level is an extremely juicy opportunity, guys. So much big support in this range all the way since pretty much last June. So almost a year's worth of support at these levels. And the company's fundamentals have just done this ever since then, right? So moving forward, guys, if we do get a little bit of a drop here Monday or Tuesday morning, bringing us down 55, 54, I will be looking, guys, for 50, 49, 48, as low as I can possibly get on CLH. Seems to be like a very juicy opportunity for me. And we are still daily oversold conditions. So those are just 4 riskier trades that I kind of wanted to put out there just in case you guys were wondering about them. And then obviously the top 5 were a lot more safer, a lot more sturdy plays, right? So that's pretty much everything I had for you guys today. I hope you guys appreciated today's video. If you did, consider dropping a like, would really appreciate it for the growth of the channel. Second, if ever you are not subscribed, please subscribe to the channel, guys. We do these videos every single Sunday evening, top 5 options plays. And then obviously throughout the week, we do our daily market recap recaps Monday through Friday. So hopefully hope to see you back in one of those future times. And then as usual, guys, if you have any questions whatsoever on the strategy, if you want to run a short put play by me that maybe you think is a good idea, but you want a second opinion on, anything you want, guys, leave it down below in the comments and I'll be sure to get back to you, usually within the first 24 hours. So take care. Have a beautiful start of the week of trading. I will see you tomorrow after the close. Peace.